Hello and welcome to the Power of Passive Investing. We are excited to have an amazing guest to this today, Jameson Lett. Jameson and I actually met several years ago at one of the family office event, and we hit it off immediately. Jameson is a wealth of knowledge, and I really enjoyed our conversation. It was very deep, but I am excited to finally have Jameson on our webinar series, and he is excited to share his knowledge. Jameson, welcome.
Hi, Alina. Thanks for having me. I'm pumped to be here.
Thank you so much. Why don't we start with you sharing with our audience a little bit about yourself and how you come to where you're at today?
Yeah, sure thing. So, years ago, I was working at a nonprofit here in Columbus, Ohio. It's where I'm based, where my team is based. And we were, having kids, young family starting out, and we just got to that point where we both actually worked in the nonprofit space. So difficult to raise a family on two nonprofit salaries, and I was also kind of bored. So maybe some people can relate to that, in your W-2 jobs and maybe just not feeling like you're getting all you could out of it. So long story short, all that stuff led for me to start my own business, and that's the business I have now, doing wealth management. We do comprehensive financial planning, we manage investments, we build insurance portfolios, that kind of thing. So I had the what I call the entrepreneurial itch, and started when I was a kid. Had a paper route business when I was 11, technically before
Wow,
you're allowed to. But yeah, my
impressive.
older brother got the route, and then we split it in half and worked together on it. And so yeah, so just have always kind of had that mindset and found a good opportunity to press in to that. I guess that was around 2012 or so. Yeah,
And
about
flies.
13 years. Yeah.
Yeah, that's awesome. And Jameson, did your wife join you on this journey as well? Is she working with you?
No, no, we laugh. A lot of my colleagues, like their wives might be a secretary in their business or something like that, and that is not my wife. If you've had the privilege of meeting her, she's got her own career, own goals, and stuff like that. Although, if and Alina, we've known each other for a little while, and anyone who does might know my story a little bit. She really put her career on hold. We've got three kids; they're teenagers now, 14, 13, almost 12 in a couple months. And
Tough age.
yeah, yeah. So very interesting.
Yes.
For different requirements. It used to be I could go home after a long day of work, and if I just laid on the floor in the living room, the kids would climb all over me. And that's what it looked like to be present for the kids when they were, we had three under three
Yeah.
at one time. But now they've got, big kid issues, boys, girls, and all that fun stuff. So my wife had her career on hold for about a decade. I mean, she still worked, but obviously she was full-time parenting at the
Yep.
same time, and I was trying to start this business and get things going. So we kind of switched back around 2020. So I'm very diligent about the time I spend working, because I really want to have enough time to be home with the kids and with my wife and supporting her career. She does a lot of good work in like public legislation and stuff like that, stuff that's really important and affects all of our day-to-day lives. So
Yep. Yeah, amazing, amazing. It's a great journey, Jameson, and I'm very happy to hear that both you and your wife kind of support one another. And she stepped aside to support the family when you were growing the business, and now you turn to support her and helping her to grow her career, which is awesome. But one can only appreciate working for a nonprofit after doing that for a few years and realizing that it's not the best way to raise kids and have a family of five. So kudos to both of you that you realized it early on and took action to change that. Now that you've been building your company for the last, what, 12, 13 years, more or less, and have come around and have grown and have a lot of great clients. I'm excited to dive into some of the topics that we talked about offline before starting this recording. So, in terms of the products that you offer, what would you say are some of the more popular products? And I'm not asking for specific companies, but I'm asking in general terms. Is it life insurance? Is it investment products? Like, what's more common, more popular among your clients?
Yeah, yeah, Alina, that's a great question. So, it certainly depends. Everyone finds themselves in a different space. Meet a lot of LP investors and real estate investors when they are looking for advice around life insurance, specifically. That's one entry point that where I often find myself. There's a lot of marketing out there around life insurance and cash value and stuff you can do with it. So you can just, Google it if you don't know what I'm talking about. And that was kind of my connection to the LP investor community, is that they were looking for someone to structure policies with um, a high cash value, and there's an ability to take tax-free loans and all this cool stuff you can do. And they were looking for a trusted resource. As many of your listeners may know, insurance products pay commissions to agents, and they can be structured to put more money in the agent's pocket, or they can be structured to put more money in your policy. So a little bit of a conflict of interest potentially. And so I just had some clients that were in this community, and they started connecting me with some of their other investor colleagues. And so that's often where I'll meet folks. But it is interesting. A lot of times people call in with questions about life insurance and cash value, and they want to know if it fits into their plan, like how should they customize it? How should they structure it? And a lot of times those conversations lead into more of a comprehensive planning dialogue. It's the type of thing where people are wondering, am I on track? When can I exit this W-2? Most people that I talk to, I mean, I have clients who retired one day and were on the golf course the next day, but
Mm,
it seems like most of the people I meet with are really looking for more of a slowdown phase. Like, I don't hate my job, but if I could work less and maybe spend my time doing something more meaningful, maybe in a nonprofit type of space,
mm-hmm.
you know, then that would be really amazing.
Yep.
So we often will build models to see, all right, when can we exit a W-2 position, have a different source of income while we build up passive income at the same time, not necessarily waiting till we're, 67 to turn on Social Security or something like that. And of course, on the investment side, Alina, it's funny. So a lot of the LP investors, they're not looking for investments because they're trying to do their real estate investing. But the more people I talk to, our approach is kind of like, if you're really good at something and you're good at making money doing something like real estate investing, do that. Keep doing it. And if you're not so good at maybe picking stocks or doing stock market type investing, then
Mm-hmm.
you might want to hire someone like myself, my team, to sort of
Right.
take that off your plate and manage that for you. So we really focus on, where can we add value? That's why we don't only charge fees to do comprehensive planning. It's why we don't only do insurance products, and it's why we don't only manage investments. A lot of people in my industry that they're just there to gather up the assets, manage as much as they can. If you have an advisor like this, you might know when you go to do another real estate investment and you're taking money out of the account they manage, that's a pay cut for them. So,
AUM.
they might not, yeah, they might not be happy about it. They might tell you, oh, it's risky, don't do it. We just have a different approach. Our goal was to help people and kind of figure out where we can add value. So can't be all things to all people, of course, Alina, right? But it's not too much to have an expertise in both insurance and investments. And of course, planning is something that everybody wants or needs at some point. Sometimes it's just when they get to, maybe they're even at that point where they're ready to exit the W-2 or retire. A lot of times they're just asking, all right, I think this is all going to work, but I kind of want to be sure. Or is there anything I haven't thought of, you know, just that I'm not thinking about? A lot of
Sure.
times that's when they're reaching out to have a professional sounding board.
I love it, Jameson. And thank you for such detailed answer. There's a lot to unpack here. And I appreciate you sharing that while you're fee-based, your main goal is not AUM, which is for some of the listeners that may not know, AUM stands for Assets Under Management, where essentially some financial advisors are only based on how much assets under management. In other words, how much money they're managing for their clients, and that's why, as Jameson politely mentioned, they would not be willing to easily give up any kind of money for their clients to go into real estate, whether it's syndications or private lending and whatnot, because that would be detrimental to their income, to this financial advisor's income. So we're happy that to share that Jameson is not such advisor. He has a very different approach, and it's very refreshing to hear your approach to real estate and the world outside of the stock market. I personally a huge supporter of a balanced portfolio. I don't tell people to get out of the stock market. I tell them to have a balance, and the balance doesn't have to be 50-50. It's whatever you personally feel is the best for you based on your risk reward portfolio. It could be 60-40, 70-30, or whatever the numbers you feel confident in splitting up between Wall Street and Main Street. And that's exactly what I was sharing in my book, Your Legacy on Main Street, that where people should be investing in stock market, but there is also this other outside the world outside of the stock market, which is Main Street, which includes not only real estate but other businesses, gold, oil, and so forth. So all of the things that you invest directly, not through the stock market, and that allows people to be open to opportunities that they've never thought before. But
Very
um,
well said. Very well
thank you,
said. Yeah,
thank you, and
I always look at like there's benefits, right? So like public markets give us liquidity.
of
So it
course,
does make sense to have, right? Probably some type of
yes,
exposure there. But even if it's limited, again, you're giving up liquidity. So then where else can we get liquidity, right? We don't have to use public markets for liquidity. We can find it in other places. So I think those are the conversations I have with clients, as you just said, to figure out what do they need, not from a product standpoint, but from a strategy standpoint. How are you going to fund your next deal? What happens if you wire that money to that sponsor and you never see it again? Is that going to
right.
put you in a bad spot? What's going to happen with the other things you have going on? Finances is like a web, right? One thing and over here, you start tugging on that, and then it affects something over here, and it's hard to always see how they're all connected. So that's kind of where we approach things, Alina, is how are these things all connected, and can we help our clients see it in a way maybe they haven't before?
Yes, thank you, Jameson, and I appreciate that approach. And also, just like the people sometimes or a lot of times decide to collaborate, and they don't even have to be working in the same company. They could be working different companies, different industries, but there are always ways to collaborate and find ways to help and support one another. There is also a way to support one another through different angles and different investments, and that's where the concept of infinite banking, defined by Nelson Dash in his famous book, Become Your Own Bank Banking, I think, comes through. And I know you briefly touched upon it, where people can set up their insurance policy in a way where they can tap into that and take a loan against it and take that loan and invest, whether it's in stock market or real estate. But that allows them to essentially kill two birds at once: have the policy and take that loan where the loan is not against their policy but against the company itself, which allows your policy to continue growing while you're investing money in something else. Is that popular among some of your clients?
Yeah, I would say it's definitely a popular concept and strategy. I usually avoid a lot of the marketing sort of gimmicks and dress up. There's so much about it with whole life insurance. I mean, 200-year-old product, Alina.
Mm-hmm.
That's older than the S&P,
Yep.
right? So, I understand the desire to like dress it up and give it a new name and stuff like that, but we're really just talking about a concept and a strategy that's been around for a long time that people have been doing. And all that to say, when you hear some of these terms and things like that, a lot of that is more sizzle than steak, in my opinion. So I just talk about life insurance, how to structure it, and how to use it for whatever your goals are and what you're trying to accomplish.
Sure, makes sense. Thank you for that, Jameson. On that note, let's switch gears and talk a little bit about things like mistakes. Like, what are some of mistakes that you see people do when they approach their retirement planning?
Hmm. So it's, all over the map, Alina, as you can imagine, between, we've got 20-year-olds that are just getting started. We've got little old ladies on Social Security. And of course, our true focus on business owners and LP investors. So if I'm rattling off some mistakes, I mean, liquidity is always one. People are often, whether it's because they're investing in real estate, which by nature is illiquid, or even just like putting all your money in your 401k. I think that, we've probably all heard that. It's very common advice in my industry is step one is like 3 months of living expenses in your checking account, and step two is max out your 401k.
Mm-hmm.
I think this misses all kinds of things, let alone that you're locking money up in a one-dimensional asset in a 401k for, when you're 60. If you're 22 and just getting started, that's a long time to have your money only doing one thing for you. Um, so I think overfunding a 401k is often a mistake. Now, if that's the worst mistake you ever make, you're probably going to be okay. So I like to remind people you don't have to do it perfect, this whole
Yep.
financial journey, right? But certainly better to optimize, right? And as long as you have viable options, then you're never really going to be in any trouble. So I think when you are thinking through your own financial journey, think about different scenarios that can happen and then what are the options.
Sure.
I have an old friend. We've known each other since third grade. He's also a client. Um, he was probably my first friend to pay off his house. He paid it off in his early 20s, and he's paid off every house since then. Um,
Impressive. Wow.
yeah, very impressive. He also would tell you he knows that I'm going to tell him to stop making those extra mortgage payments because it's probably not the optimal way, right? But he enjoys it, and he likes owning his house. So that's what he does, and that's fine. Again, that's a small mistake that we can correct with other things. A mistake we can't correct, he's very dependent on his W-2 income. He's a high earner. Um, and, trying to get him to spend a few $100 a month on some long-term disability insurance is like pulling teeth. So I don't work with a ton of my close friends. I do work with I guess probably a few of my closest friends are also clients, but I don't work with all my friends because it's hard sometimes for me to put the advisor hat on and tell them what they need to hear. So with this friend, in our next meeting, what he'll hear is to stop cheaping out and buy the insurance policy because everything's going to work out for him
Yeah,
financially, right?
of
But if
course.
he wakes up one day feeling a little under the weather, gets a call from the doctor. People don't realize most disabilities are caused by illnesses. One out of four 20-year-olds will have a long-term disability claim sometime in their life. That's a pretty high
It
percentage.
is high. Wow, I
And
did not know that.
yeah, yeah. So what I am trying to communicate with him is like, you're not going to miss $300 a month. He's
Yeah,
not.
of course.
Um, he's not going to miss it. But what he will miss is if that W-2 income goes away and he doesn't have anything to replace it. His wife depends on him. He's the high earner. They've got 3 kids, all that stuff. So, it's not the sexy stuff, but sometimes on the insurance side, that's why we don't outsource that to other advisors because it's a very important part of the conversation. And I would say personally, I mean, I'm not a big insurance person. I just think if you can't afford to risk it, then don't, right?
Sure.
That's it's really that simple. So a death, a disability, or a lawsuit. Those are three mistakes that can have a 6 or 7 figure price tag. So if you can afford uh, a 6 or 7 figure mistake, different question. Most people
Right.
can't. So
Yeah. Very
do you
true.
buy insurance on your iPhone? I don't know. If you're clumsy and you drop it, sure, go ahead. But if you break your iPhone and don't have insurance, you're probably going to be fine. You'll buy a new iPhone. You'll be mad, but it's not going to affect your financial success. So I'd say those are some of the mistakes. People underinsure them their incomes. They underinsure their lives for life insurance. If you don't have an umbrella policy, we don't do those. That's property and casualty insurance, which isn't our expertise. Go
Mhm.
talk to an agent, get an umbrella policy. It's like $200 a year for $1 million of coverage. It's
Yeah.
little things like that sometimes that people miss that may not have an impact, but it's like you've got all your cards on the table with a few of these risk factors. So I would put those in there for sure. Again, not
Makes
the
sense.
not the stuff that most people want to talk about or spend a lot of time talking about, but it's good to at least make sure you know what you're risking, know what your threat assessment is, and then of course a big thing for us, Alina, is like it's not our money, right? So our job is to put ourselves in your shoes, help you make decisions the way we would if it was. But then at
Right.
the end of the day, you're driving the bus. You make decisions because you have to live with those, whether you pay an insurance premium or not, whether you do
Of
a
course.
certain type of investment or not, right? You live with all those decisions and we don't. So our conviction is to make people aware of opportunities and threats that they have in their financial world and just empower people to make the best decisions they can at the end of the day.
Yeah. Jameson, thank you for that response. It's very refreshing, and it's also a topic that's not too sexy and people don't really talk about it. Nobody thinks about death or illnesses. But one follow-up question that I have on that, for someone like your friend who is a high W-2 earner, he probably, totally guessing here, but he probably gets insurance at work. What would you say to those folks? Like, is that insurance enough, or should they look for more, or should they even bother taking that insurance at work?
It's a great question. And unfortunately, the answer is going to be it depends, right? So, on the life side, usually you can't get enough at work for most people, but everybody is a little bit different. And also, we've had clients pass away in between employment.
Oh, wow.
They took a new job, took a month off in between, and well, one guy passed away on vacation.
That's
So
crazy. Oh my God.
yeah,
So sorry.
so for most of these things, it's better to have your own coverage. Disability is different. It doesn't usually pay as much, but then um, it doesn't pay as much as what is advertised. That's would warrants a little more explanation, but
Mhm.
essentially we'll use group benefits when it makes sense. Sometimes it doesn't. Sometimes it's more cost effective. We have a young couple here who just went through underwriting and the results weren't that great. So we're
Mm,
going to figure out, we're going to talk with them, of course, because at the end of the day, it's their decision, right?
yeah.
I think we're going to use their group benefits because the cost to get their own policies is so high. It's going to, it's probably not worth the squeeze. The juice probably isn't worth the squeeze, but we'll see. Again, we're going to give them the information, let them make that decision. But yeah, so group benefits should be considered. They're usually not enough, but everyone's a little bit different. So it's good to know the pros and cons.
Of course, of course. Yeah, I would definitely agree with that. And I appreciate your feedback on retirement planning and 401ks. I do think it's beneficial to at least be, have to be putting into 401k the minimum where the company gives you a match because you want to take advantage of that match.
Yep.
But what a lot of people struggle about is deciding whether to put the money as a regular 401k or Roth 401k, and that's been a puzzle for a lot of folks. Is there a general advice or something that you could give to our audience in terms of that decision?
Yeah, well, I think you already know, Alina, I don't enjoy like blanket advice because everyone really is different. If you had to
Yeah.
close your eyes and pick one, you probably want to pick the Roth. And I'm only saying that based on two things. The number of plans I've ran where we've measured it and it made more sense for the Roth versus the pre-tax, or often it's a combination of both. So
Mm-hmm.
if we have a comprehensive model that we can use, we can actually dial it in based on your actual um, cash flow, tax liability. If you're doing a Roth conversion strategy as well at the same time, so we can
Mm-hmm.
measure all that stuff and dial it in. On a conceptual basis, though, I just think about like it's hard to get tax-free income sources,
Yeah.
right? So if you have an opportunity to build one up, they will usually match your Roth contributions into a pre-tax side of the 401k, right? So for most people, and if you have pensions, right, those are going to be taxable. Your Social Security is going to be taxed based on your taxable income. So the
Sure.
more pre-tax retirement money you have saved up, the more taxes you'll pay on your Social Security at the same time. So
Yeah.
again, I know it's just very general, but that's kind of the thinking is that it's just hard to get money. If you make too much, you can't contribute to a Roth IRA. You can only do conversions.
Mm-hmm.
It's hard to get money in there. So if you can just make contributions into a Roth, it's certainly worth looking at.
Yeah, makes sense, and I definitely agree with you. Thank you for that response, Jameson. When it comes to next generation and legacy planning, do you see a lot of clients looking into that and working on that? And does it happen earlier in life, so later in life when they're closer to their retirement?
Yeah, people are, I think all over the map, right? Life's can be challenging, certainly can be busy. So I
Mhm.
think it's one of those things. I've got a to-do list that's probably a mile long, and as it whatever makes its way to the top of the list is what I get done, and everything else sits there until it does the same thing. From a legacy planning standpoint, I think I'll go even like back kind of a step to inheritance,
Mm-hmm.
right? So often funds are going to be coming in for younger people at some point. And when we think about inheritance, there's, and maybe your audience will even have an answer to this. Like, what's the worst thing you can inherit that's actually an asset? It's typically a house or an IRA,
Sure.
right? The IRAs are taxable. You're probably in your highest earning year. So now you're going to have to pay taxes on the money as it comes over. You used to be able to stretch that out, but some legislation changed that over the last few years. So you've got the IRA you're going to pay your top tax bracket on, and
Mm-hmm.
you can't leave it in there. You've got to get it all out in 10 years. And then when you inherit a house, it's often inheriting a liability, right? You got to pay taxes and insurance. You might have to fix the place up before you can sell it. Oftentimes, it's more just liquidate as soon as possible, so you're not getting the top
Sure.
dollar for it. So a house and an IRA, what do most people leave? House and IRA. So we often working with folks in retirement. We
Mm-hmm.
try to factor that in to say, listen, these assets don't transfer well. Why don't you spend those and let the assets that get a step up in cost basis or
Sure.
a Roth asset that's tax free? Let's transfer those, save those for the end of your plan
Yep.
when you're going to be drawing down potentially for like medical expenses and things that are really expensive, and then transferring to the kids. So we'll kind of work that way from a money that comes in to for legacy planning. But then yeah, people are all over the map. Like I mentioned before, we've got 20-year-olds that we work with. We've got people in their 30s, 40s, 50s, 60s. I I think it's whenever the pain of that question they're asking finds its way to the surface. The pain being usually something like, are we on track? Are we going to be able to retire? When can I leave my W-2 job? Or even just everything's going pretty well. Is there anything I missed, like, or any risk that like I could lose what I've created?
Yeah.
Which was my personal sort of, starting from we really grew up without much in my family. And then I mentioned nonprofit line of work, right? So when my family was really young, we didn't have a lot either. And I just remember getting to this point where we had, bills are paid, we're taking trips, we're making investments and living a nice, quiet suburban life in Columbus. And I just remember thinking, this is great. I want to make sure that nothing happens to
Yeah.
it, right? And if of course I still have plans, for growth and all that stuff. I'm still, relatively young, and
You are young.
but yeah, there's a different. Well, thank you. But yeah, it was just a different mindset. Maybe it's with the kids getting older. Maybe it's where I was at in my career. But I assume it's similar, maybe for other people who've had a
Yeah.
similar journey.
Yeah, I can definitely relate to that experience, Jameson. Yeah, thank you for that. Well, it's been a very insightful interview. I really appreciate you. At the end of each interview, we always ask two personal questions. Number one is where people can find you. How can they reach out to you?
Yeah, probably the best place is just my website. It's just my name, jamesonlett.com. And I've got the team on there. I know we're going through some renovations now, but should still be live and active in the meantime. There's a link on there to schedule a call. If anybody wants to do that, that's usually how I connect with people, is just over a quick phone call, 15, 20 minutes or so, and to hear kind of what you have going on. And of course, if there's some way we can help, then we're always delighted to.
Thank you for that, Jameson. And I did put it in the chat. So, and thank you for making it easy, just putting your name as a website so people can find a way to connect with you. I think that's the best way to go on that. And then the second
Absolutely.
question, the personal question that we always ask is, how do you like to give back?
Oh, that's a good one. I was waiting for like the what podcast do you listen to type question. So, well, giving back, I think, Alina, this reminds me of one of the things we were talking about with time, talent, and treasure.
Sure.
Some people may be familiar with that way of sort of phrasing things. So, um, my so with each of those, it's a little bit different. But to keep the answer kind of short, I spend most of my probably those three things all come together in the work we do with people for people with developmental disabilities.
Okay.
So I just rolled off in January, spent 8 or 9 years on the board of a large company in Ohio that had some very exciting growth and is looking at changing the landscape for how those services are delivered to people with disabilities.
Mhm.
And so that's very exciting work, and was a privilege to be a part of it. And this is my sabbatical. So I'm taking this year off, but I'm actually still involved with a offshoot of that company where we're just raising more awareness and kind of creating opportunities to bring young professionals kind of into the mix, along with people who have a neurodivergent nature, and creating like synergy for professionals, both neurodivergent and just the, you know, everyday networking group you might go to. So we're trying to bring those things together and just create more opportunities, awareness, and of course have a good time, and make some good connections to pass business along with each other.
That's really incredible, Jameson. Thank you for doing that. Curious, how did you get into this line of volunteering?
Yeah. So back in college, I worked when I was in college and had a couple jobs, but I found an opportunity to work with a young man. He was my age, named Ryan, and Ryan had something called trisomy 18, which, if people know about it, it's pretty severe diagnosis. He might have been one of the oldest with the diagnosis at the time. So we were 18, both of us, when we started working together, and he passed away when he was 22.
Oh my God.
But he was going to go into a program. It's what the industry calls day services. It's you learn like activities of daily living, and for people who really can't go into employment.
Mhm.
Um, so so I actually went to work there. That was my first job out of college. And as I was working there, I worked there for about 5 years. That was my W-2.
Hmm.
out of college. And during that time, my oldest was actually born with a developmental disability. And so I was sort of shifted from being a provider to a parent. It was not a club that I was eager to join. But that is life, right? We don't always get to choose. We don't get to choose what cards were
Yes.
dealt, just how we play them. So that was sort of where we got involved, and now it's just in our DNA. So the work we do now, my wife does a lot of important work in Medicaid and legislation, which I'm thrilled about. Super important stuff that I can't do.
Of
And
course.
for me, the transition was, I noticed there what a difference it made for some of the families of people with disabilities. It's not everything, but what a difference it makes to have extra money
Of
or
course.
just more access to funds and services
And
and to
services
sort
too.
of position things. Yeah. So that was sort of my impetus for this change, was that, that I could help. I just knew it was something I could help with. And so I've actually been plugged into that community pretty much since I was in college. And now we provide some of the benefits and 401ks and group plans for some of the companies that do that stuff, as well as, like I mentioned before, serving on the board for another company. So yeah, that's
That's
how we
amazing.
got plugged in, and we'll continue to be plugged in for years to come, I'm sure.
I'm sure, and thank you for sharing your story. It's definitely very impactful, and I actually know a number of people in a similar position in other states. And just curious, for my own benefit, would you say that it differs from state to state?
In terms of supports or
Support services funding, like for every, like, because I know a couple of people in Pennsylvania, I know a couple of people in New Jersey, one person in New York. Like, would it make sense for them to speak with you, or it would be very different because they're in different states?
Yeah, from a financial planning standpoint, for sure. The laws vary from state to state in terms of estate planning.
Hmm.
We've got attorneys and tax professionals that we have on staff and to support that. From a support standpoint, that can vary from county to county.
Oh, wow.
So
I see.
yeah, so it's I mean, this was kind of a realization for my wife and I, both college educated. We both worked in these fields. My wife worked in mental health when I was working with people with developmental disabilities. And we realized, man, if we're having trouble navigating this based
Hmm.
on all of the advantages that we just naturally have, like
Right.
how does the average person,
Of
do this?
course.
And
Exactly.
even working in the industry, we still had a lot of time. Like we had control over our schedules and stuff like that. And it's hard to imagine how people navigate this stuff. So there should be some type of service coordination through the county or a resource that can plug you into other resources wherever you are in the United States. But yeah, every state, every county is going to have different options available.
Got it. Well,
But yeah,
amazing.
any way I can help, I'm always happy to.
Thank you. Thank you, Jameson. This has been an incredible interview, and thank you for all your input. I'm sure our audience will appreciate that. And folks, again, for anyone who wants to connect with Jameson directly, please go to his website, jamesonlett.com. Thank you, and until next time, goodbye.
Thanks, Elena. Thanks for having me.
Our pleasure.